I'm Charlotte McLeod with investingnews.com, and here today with me is Steve Barton, host of the In It to Win It show. Thank you so much for being here. Always great to have you.
Thanks for having me, Charlotte. I like our talks.
Of course, and I think it's going to be a good one today. We've got a number of directions we want to go in, but I feel like where we should start is with gold. So the price we've seen take quite a hit over the last, I would say, week or so at this point. So let's get into that. I think the last time that we were speaking, you were anticipating a downtrend in gold. So maybe we can talk about if it's played out as you expected and where we could be going from here.
Yeah, it's fortunate that we're talking today because let me share my screen here and we will go to the gold chart. And I was really hoping for a pullback to 4,100, which we're about $30 from right now. The reason I wanted the pullback there was, for one, so we could buy gold and silver miners cheaper, but also because it seemed like a pretty good area of support. See, if we go back here to March 23rd, we can see on that day, at least on the futures market here, it hit 4,100 exactly, lining up also with a lot of price action back here, which would give it additional support. If we go to the spot market, basically the same chart came down within a few bucks of 4,100 on that day on March 23rd as well. So I think it is probably, I was thinking maybe a 70% chance a few days ago that it was going to hold this level. I'm a little less certain today. I think it's probably more than half the time, probably 60% of the time. I think this 4,100 holds. If that doesn't hold, give it a little grace, maybe 50 to the downside to like 4,050. But if you see it below that, then consider this support level basically broken. There's a tiny bit of support after that, around 3,650 or 3,700, but it's only about a week's worth of trading, so there's not much. The next real support that I see after that is right in this range right here, and you'll remember this was the period where it was about 4.5 months of just sideways consolidation. You know, it went from April all the way over here to August, and we basically stayed in a range of 3,300 to 3,500. I look at that as the floor. I don't think that we'll see below there. So I could put a horizontal trend line right around there. That would be a back up the truck moment right here if it got down to 3,500. I don't think that'll happen. I think more often than not, we hold here around this level before we reverse higher. And we could see that the GDX, the gold miners ETF, is kind of getting down into my, so the way I like to do it is red, yellow, and green lines. Like the closer you get to the green line, the better the deal is, in my opinion. That's kind of what I call a stink bid. And I don't think the green lines get hit often, but when they do, it's a real buying opportunity, I believe, that should not be ignored. And I think I think there's a pretty good chance we could hit those here, Charlotte, and in short order. So I like GDX here as a buy now. And I really like this level right here, 68.75 on the GDX, lining up with a lot of back support right here. GDXJ getting very close as well. I like a buy now. And I also like a buy right down here at $89. That would line up with some back support here. Now, these levels could fail. And if gold goes to 3,500, I think they will. But, at some point, it's kind of like Rick Rule says, at some point it's cheap enough and you just got to throw your hat in the market.
Right. So you are liking this level for gold, and if it goes lower, that's also okay with you because it will be a chance to buy. But I know a lot of people are wondering about that next leg higher that you mentioned. So I wonder if we can talk about timelines for that. How are we looking? And potentially what could be the next trigger that takes us into that leg for gold?
If this support holds, ideally what we'd like to see is today or tomorrow a quick bounce up, like we had over here. Like we want to see a bar that looks like that. I'm not as optimistic as I was a couple days ago that this level will hold. So basically we need to see a level above that. I'm not going to turn bullish on gold until we kind of have a parallel channel right here, right? See how it kind of lines up there on the top, the bottom, the top, and the bottom. Until we can break out above this upper parallel channel, which right now is at 4,700, I'm not in the least bit bullish short term here for gold. Now, the thesis isn't broken. I'm literally buying more. One of my limit orders hit today here on PHYS. This is a physical bullion on the stock market. I've had this limit order set for months and it finally hit today. And, but yeah, I can't turn bullish on gold until we clear the 200-day moving average, until we clear the upper part of this, downward trend line. And until we basically close the week above 5,200, then all systems go. We're back on. Now is the time, I think, to be accumulating some of these gold and silver miners, because, like a lot of the gold miners, their average all-in sustaining cost is just north of $2,000 an ounce, and we're sitting here at 4,100. They're printing money. So I think this is kind of a golden opportunity here, where we all believe that our governments haven't stopped printing currencies. Their debt and deficits are only getting worse. Central banks continue buying gold. The bet is still on. This is a moment in time where we can take advantage of this. Maybe we're seeing a bit of a liquidity crisis. The dollar is looking like it's going to be moving higher. So that's probably going to put some pressure on our favorite commodities. But I can't turn bullish on this until we clear this upper part of the trend line. So that number right now is about 4,700.
Yeah. So case for the miner is very strong right now. And I wonder if we can look at silver support and resistance levels at the moment, because of course we know it's always more volatile than gold. So we could see more upside and downside on that commodity.
Yeah, I'm liking today as a decent level. We did lose the 200-day moving average, that blue line right there. So that is significant. As long as we don't fall too far below it, we have a lot of support basically where we are now. Today we're sitting at $65. We have this support right back here at about, call it 61, 62. If that fails, then I think we're going to 56. And the reason I think we're going to 56 is if we go out on the chart here, this is going back to the 70s. Every single trader on the planet has this same white line drawn on their chart right here, going across and like that. And you can see I'm just connecting the tops right here and extending it out. And if we zoom back in on the chart, we can see that same white line acted as resistance right here, and then it broke through it. So when you have such a wall of resistance like that, a basing pattern that took 45 years to form, I have a real hard time thinking that we're going to break through that to the downside. So I think you can essentially look at that as the floor on silver. I would be shocked if we broke through that white line with any real significance and stayed down there. If we did, I would have to rethink my thesis, and I might, maybe the bet is off. Give it a little grace to maybe $48 or so, but I think that's effectively the floor. I think you're okay to buy silver miners now. We had a nice little bear flag here that played out beautifully and broke to the downside. I think we're getting close to the end here. Here's SIL, okay, for the silver miners ETF, right? We're in a pretty good support zone right around now. I got the yellow line here at 78. We're below that. So look at the past price action right back here. And then the one I'm really hoping for is this 62.50, and that would be the bottom side of what used to be a kind of a little miniature cup pattern right there. I think there's going to be a lot of buying around that level. I will be doing the same. And SILJ, here's another junior silver miners ETF. And I think you're fine to buy now. And then I'm also trying to catch the bottom side of that kind of cup pattern right here at 21.50. I'm pretty optimistic they'll hit, Charlotte. I really hope they do.
I wonder, when it comes to your trading strategy, does seasonality play much of a role in what you're doing? I think we all know about sell in May and go away. And recently I've had a number of people tell me the summer historically tends to be a weaker time for gold and silver. So are you thinking about that when you're making moves?
No, I probably should more. The next time we get on, there's a seasonality feature here in TradingView, and I haven't taken the time to learn how to use it. I'll figure it out and I'll pull it up on our next chart, because maybe I should factor that into my season or into my bets a little bit more. I don't, but that is something that I'll look into it. And the next time we come on, I'll pull it up.
Well, no pressure. If things are working for you as they are, then I would say keep doing what you're doing. But if you do find out, we'll take a look at it. I think we should shift over and take a look at what's going on in oil. So this is a topic we've been discussing for the last few times we've been talking, I believe. And we know that oil prices continue to be volatile with the Iran war. We were talking last time about how beyond that we could be seeing a broader uptrend. So what are the charts telling you about the outlook for oil right now, either in the short or the long term?
Okay, here's WTI. And we had, of course, everyone is familiar with what's going on in the Middle East. We had the nice price spike up and then basically just kind of volatile sideways chop that eventually formed into this pattern here. It's kind of like basically a triangle pattern going back and forth. And usually when you break out of these patterns, you do it pretty violently is not the wrong word, but it's pretty sudden when you break out of them. And most of the time when you break out of these patterns, you go to either the outermost price target there or on the up or downside, depending on which way we went. Now, we did break to the downside here, so I expect in the short term, it's more likely than not that oil will get down to about $80 a barrel. But when you look at the fundamental case, I mean, nothing's getting solved. Apparently, they're still shooting down helicopters and whatnot. So I don't think that the strait is going to be open anytime soon. So fundamentally, I think long-term oil is probably going higher. But on the charts here in the short term, it looks to me like it's going to be going lower. I was watching another TA last night. Who was it? It was Drew Dosick from Verified Investing. And he had this now extended kind of like this as far as looking at it like the triangle pattern is basically just extending. I think he had it drawn back over here. And maybe there's something to that. Maybe we just broke down like we did. We're able to trade that, and now we're moving out to kind of another point out here before it becomes an even more of a violent move when it does break out. But basically, in the short term, I see kind of sideways to down. Long term up.
What does your exposure to oil look like right now? I know a lot of people are seeing what's going on. They don't want to touch it right now. And it's feeling tricky in terms of where do you get in to anticipate that longer term upward move? So how's it looking for you?
Here's one that I've played, and I started buying into this when Rick was telling me about it, I don't know, 3 years ago or so. And I was basically just bottom picking this XLE ETF. I did take some profits up at towards the top up here. I think my oil exposure right now is maybe 15% of the portfolio, something like that. It's not as much as I would have liked. Had I saw the war coming, then this green arrow right there would have been a much bigger bet. Now that I can see straight looking backwards, you know what I mean? But if you had to get into it, I would probably, like, let's say someone had no oil exposure. I don't think it would be a huge error to, let's say you had a target allocation of you want 15% of your portfolio to be oil. I don't think it would be a mistake to bet maybe 20% of whatever target allocation you want today. And I don't think that would be a huge error. If the Strait of Hormuz gets resolved like now, this chart's going to do that. If it doesn't get resolved or something worse happens, then the chart's going to do that. You know what I mean? So you could be buying a little high, you could be buying a little low, but I think not having a seat at the table, I think is more risky than not. So, maybe whatever your target allocation of that would be, taking a 1/5 position today, I don't think would be a huge error.
Okay, so as usual, it depends how your portfolio is looking and what you're trying to do. I think that's helpful. I want to make sure we take a look at uranium as well. I recently had Justin Hune on. We had a good conversation. I know you talked to him as well. He's more on the fundamental side. He was saying, though, now could be one of those buy low type of times for uranium. So from a technical perspective, how do you see it shaping up?
Yeah. So this is the spot price of uranium going back years. I can back this way up, and we can see that we had the nice spike up, which is one of the reasons we like investing in this thing, is because it's so volatile and the utilities have to have it. And so there's always a demand there. Now, recently, since the March 2025 sell-off, we've had a steady price increase here. in the spot price of uranium, going down from the low 60s. Now we're into the low 80s on the spot price. But the beautiful part of this bet right here is it almost allows you to see the future. So when you look out at term contracts, so these are contracts that utilities are signing going 12 months or further into the future, that the minimum price for the pounds of uranium is $94. But we can see here that the spot price is 85. So you got an arbitrage there of $9. So essentially what they're saying is that 12 months from now, which would be right around, let me move the chart over a little bit. And so if we go a year out, basically the price is going to be there, right? Well, that's going up in the chart. The bet is still fundamentally on. I like it a lot, right? Now, when we go into some of the equities, so here's one right here that I like a lot. This is if there is such a thing as a safe play in uranium, this is it. Okay. There are no safe plays in uranium, but if you're going to play a uranium bet and you want it to be as safe as possible, then buying the physical commodity SRUUF, this is the Sprott Physical Uranium Trust. This is the one to do it. And we're hitting my green line today. So when I go off screen here, I'm looking at the Sprott Physical Uranium Trust website, and we are at about a 10% discount today. So essentially what that means is that you can buy $100 worth of uranium, but today it only costs you $90. That's a pretty good deal. The biggest discount I've seen on that fund is where it gets to 18%. So it's certainly not at its extremes, but it's still pretty cheap, and if we know that a year from now, that's the minimum cost, right? About $9 or $10 higher than we are now. And you can buy it at a 10% discount. Historically, I've made money doing that, and all we do is we just buy it down here when everyone hates it. We sell it when it's loved. We buy it as it's in the pullback, and then we sell it when it's loved. And now we're experiencing another one of those pullbacks. These periods can last 18, 24 months. Sometimes they can go really quick, especially towards the end there. I mean, you can make all your money in 6 months if you time it right. But, I just look at it as the further this goes down, the more I buy. And we're at one of those really cheap levels right now. If this 1850 level doesn't hold, just look at the Sprott Physical Uranium Trust website. I like a limit order down here around $17 or so. That lines up with like a lot of back support right back here. The overall pattern here in a lot of the uranium charts is a head and shoulders pattern. So we have shoulder, head, and then shoulder, and it's just broken below this white line right here, which is the neckline. Now, technically, if we want to go by what the chart could show that it could do, we could have a real washout sale here. I do not think that we're going to get levels down here to $12, but that is what that pattern is showing. I think it's much more likely that we round out about where we are now or a little bit lower before the next leg higher. But this is where you make your money, is you got to click the buy button on days like today, and that's exactly what I've been doing. You could do it here with URNM too. I think you're fine to buy today. I also think it'll probably get a little bit cheaper and get down here to $50 a share. I think that would be an excellent level to click the buy button, or an individual uranium names that you follow and you like a lot. And then as far as both of them, I'm taking profits up here around $80, $85, and that's just going to line up here with this. And same with SRUUF. I'm going to take profits up here around $24, which just lines up with the previous high. But yeah, that's where I see uranium. I think it's a buy today. I think it's a deal.
Thank you for going into that one as well. I think it's really interesting with uranium. The longer I keep an eye on the market, the more it seems like, even though it's got this positive long-term trend, it really seems that the trends are so repeatable that it can be one that you get into and out of if that works for your strategy. So nice to highlight how people can do that. I think on the energy side, we should also take a look at coal. So last time we were talking about how coal was in a sweet spot, but it might not last very long. So how are we shaping up on coal? Can we still have a chance to get in, or has it moved on?
I like it a lot. I'm going to turn this into a line chart just so that it might be a little bit easier to see. We'll make it yellow and kind of heavy. There we go. Okay. Yellow is Pacific thermal coal. So think coal burning in power plants right? Heating homes like that, right? So there's two types of coal. There's met coal, which is used for making steel, and there's thermal coal, which is what you're looking at on the screen now. So this is the pricing out on the Pacific side. Okay. And we can see that we recently had, when we were talking before, we're kind of around just coming out of this right here, which is shoulder season. You can imagine that there's more demand during certain times of the year for heating and electricity than there is for others, usually corresponding with the weather. So you can kind of time these cyclical entries. I do that by interviewing a coal expert and picking his brain and doing what he says. That's how I find it. But full disclosure there, Matt Warder is our is our rep on that. Anyways, he was basically pounding the table saying that this was a heck of a buying opportunity. And so we took it. And so this is Pacific coal, and we can see that it's moving on up here, coming up into some resistance, but still climbing higher. Here is thermal coal on the Atlantic side. So, servicing Europe and the east coast of America and Canada. And we can see this one spiked up, right? And here's met coal. And since shoulder season, it's just had a steady climb up. So now, how do we bet on that? The easiest way that I have found is this coal ETF. It's spelled COAL, and it's a basket of, I believe, 20 different coal companies, both thermal and met. So you kind of have a 50-50 slug on both of those. And I thought we'd pretty much seen our lows right here, but we're getting a second shot here. So we're essentially out of shoulder season, but we're getting a little reprieve here. And I don't think this has anything to do with, anything bad with coal. I think it's that, the stock market is falling, and this is the baby thrown out with the bathwater. So we're getting a second shot on this. I mean, if you think about it logically, the coal companies are now getting a higher price for their thermal and their met. Why are their shares selling off? It doesn't make any sense, right? So I think we're getting an opportunity here, a second chance on coal. So I think it's a buy today. I got the red line right there at 26, and then this yellow one down here at 24.50. We could come in and touch this. It depends on how much liquidity needs to be sold. But I don't think so. I think this is probably your shot. And then there's the super stink bid down here, which is, I think, highly unlikely. And that's 22.50. But I like a buy on coal today. If I had not bought back here and I had missed this, I would be taking a full position now.
Well, speaking of coal, maybe following the general stock market downward, that is something we should touch on as well. I believe when we talked last year, telling us there's no fundamental reason for the broader stock market to be this high. I think many people would agree with that. And we have seen it retreat, but still very historically elevated. So are we due for a further correction there? How are you seeing it in the charts?
Yeah, it looked like we were good to go higher a few days ago, but recently what's happened, if you look at this bar right here, we've made a lower low. So we kind of had, let me draw a horizontal line here, and that would, I see the stuff in my head, but I don't, there we go. Okay, so see how we hit there and here, and then we just broke right through it and then closed above it, and today now we're closing below. So we're making lower lows. I think we're good to go lower. We may get a little hiccup here on the 50-day moving average, but I personally don't think that's going to stop it. We've basically broken the trend. We had quite a run right there, and then just fell out of bed and lost our first support level. Our next support level is going to be right around here. If we did a Fibonacci extension, it would hit on a level at around 71.50. So you're going to have a bit of support right there where I've drawn that white line after that, which is going to be 71.50. But lower lows, I think we're going down. We still got a lot of room to run here on the RSI and the MACD. So yeah, I don't see us getting a meaningful bounce here.
Well, and with that downward momentum in mind, I am hearing some people say, well, I'd rather have more money in cash right now. So how is your cash position looking? Is that something that you're shoring up right now? How are you doing that?
I'm in the unique first world problem of having too much cash. My cash position right now is probably, I've bought in the last few days. It's probably closer to 35%. I would feel a little more comfortable if that was around 20. So I've been actively buying. In the last few days, I've been buying gold stocks. I bought another silver miner yesterday. I actually bought palladium yesterday. I haven't bought palladium in forever. So I'm starting to deploy. Like I really believe in like have a plan and trade the plan. And my plan was when gold pulls down to 4,100, I'm going to start deploying, and that's what we're seeing today. So there's an example right there. There's one limit order that I've got hit on PHYS, and I'm excited now. I'm ready to deploy some cash.
Well, let's hear a little bit more about the case for palladium. I feel like it's a little bit out of sync with the other precious metals, at least gold, silver, platinum, because it had its all-time high years before, and it wasn't really doing that in January with the rest of them. So what's the case there? Why should we be considering palladium?
Well, it's just really gotten sold off here. Up from the highs up here. Let's see how far down we are. It's got to be more than 40%. Yeah, 44, 45% from its highs. And that was only at the beginning of the year. So in just a few months, we've almost halved the price of palladium. The levels I've been eyeing is in a lot of these stocks, the cup pattern that we were talking about before. We're starting to hit down around that. So that was the initial support. I didn't think it would hold. Turns out I was right. And now we're moving down to the next leg lower. So I took a palladium position yesterday. This recent pattern right here looks like we might be ironing out a bear flag. Ooh, yeah. Okay. So I think we're going to get cheaper on this one as well. So if you look and you can kind of see there's a pole right there. This is the 2-hour chart. And now we're starting to get out a little bit of a bear flag there. Kind of looks like a golf putter, right? So it looks like this level's probably not going to hold here on palladium. I would become even more interested if we get down here to the green line, which would be 1,100. This one kind of tends to follow silver. So whatever silver does here, I can overlay silver on the chart and we can see what I mean by that. But the yellow here is silver, and you can see that palladium is generally following what silver does. So if silver goes down here, I would expect that palladium will as well. There are moments here like this one right here. Palladium had a nice jump up right there when silver just had a little blip. But generally speaking, platinum and palladium are following silver. And so if silver goes down, I would expect this one to go down as well. But who knows? Maybe this level will hold, but I don't think it will. I think it'll get a little bit cheaper. And I like palladium. I think it'll work.
And just to clarify, this is getting exposure to physical metal because I believe the palladium stocks are quite few and far between.
Both, actually. I've got 2 platinum and palladium miners in my portfolio, but this bet that I took was simply physical palladium. So there's a ticker PALL, Papa Alpha Lima Lima, and it's like a PHYS fund, but it's for specifically palladium. If you want to play both platinum and palladium with one mouse click, you can buy SPPP, so it's SPPP, and that's the Sprott Physical Platinum and Palladium Fund. And so that could be a way that you could play both metals. But right now, I think there's probably more downside in for platinum, so I want to play just strictly the palladium bet.
Yeah, interesting. They do tend to get grouped together, but interesting to see you split them up. All right, I think we are coming to the end here. So I want to make sure we ask any final thoughts before I let you go. How would you sum things up for investors right now? And we also want to mention your technical analysis course. We'll have the link for that in the video description.
Oh, thank you, Charlotte. Yeah, I think going in here, probably the best opportunities today are going to be the gold miners and the silver miners. You're getting a second chance here at coal, which is really exciting. I think this is essentially the lows in coal. We're getting darn close to those today. Maybe we get lucky and they come back down and we can get some more. I think coal is going to be really good. Any and all forms of energy going forward. Having a nice pullback here in uranium. I think setting your limit orders, and basically buying more on the way down. Basically, I think we're heading into one of these, right? So as the capitulation happens, this is where you make your money. You make your money when these things pull back like that, and just let your limit orders hit. So I like those a lot as buys today, and as they get cheaper, buy more. Put some of that cash to work. I think it's going to pay off a lot. My technical analysis series, if you like the way I think, then I did a 3-hour video course on technical analysis. The first 30 minutes of the course is literally mouse click by mouse click, me showing you how to set up your charts just like you see right here. And then the next 2.5 hours is me walking through different patterns, like the head and shoulders pattern we see here, bear flags, bull flags. And basically all it is it's just, it's probabilities, so it allows you to identify when something is more likely to move up or more likely to move down. And then it's just a matter of finding the right ticker symbol to bet on, so that you can take advantage of those probabilities. It's a lot of fun. I enjoy it. Thank you for sharing that, Charlotte.
Of course. And as I mentioned, we'll have the link in the video description. People can check it out if they like. And once again, thank you so much for coming on and going through everything. Looking forward to having you back again. It seems like we always do these at the perfect time.
Yes, it worked out well. Thank you, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is Steve Barton with In It to Win It.